No, that thumbnail is not clickbait, and I'm probably going to stop investing. And here's why.
Cash rules everything around me. They thought that I fell off for a second, they were doubting. I would never fall off, never ever who they clowning. I just had to keep stacking this cheddar to a mountain. I just gotta keep making this paper till I'm up and never fuck. I was there broke at the bottom having dreams of...
Welcome back everyone, my name's Paul. I'm brand new to investing, and just as quickly as I've started investing, I might stop. A few years ago, I started an ISA investment portfolio here on Trading 212, and it's gone really well. Like, I really could not have imagined anything better. I'm now sat at £54,000 and I just have no idea where this money has come from. I set this channel up as an example to see if someone with a normal job and a normal life could really build enough money to get themselves financially free. It's all based around the theories of financial freedom, the FIRE movement, and retiring early. And all I'm really doing is decreasing my monthly spending and investing the difference into a dividend reinvestment portfolio here on Trading 212. I'm trying to invest that money into companies that have high cash flows and are giving back to the shareholder. And according to Trading 212, if I keep this up, in 32 years, I'll have 14.4 million. I don't think that's going to happen. I don't need 14.4 million. Which brings me to my thoughts today, and in this video I'm going to give you an August portfolio update. I'm going to take you through my dividend income and see how that's changed and how it's growing, and then I'm going to show you at the end I've got £1,393 I've got to dump into the market. That will be going in today, and I'll show you what I'm buying. But first, I'm going to go through exactly why I think I'm probably going to stop investing soon. And my thoughts from today stem from this Instagram account called Personal Finance Club. He's a massive Instagrammer, made a hell of a lot of money on some sort of thing. I think he sells courses. It's not brilliant to sell courses, but I think he made a lot of money, and he gives a lot of value in this Instagram. It's really good. And the one post that got me thinking about this is Nicole the Bartender. Now, Nicole has been investing £800 a month from a £100 night shift that she does 2 nights per week, and she's done this between the ages of 20 and 30. So for 10 years she invested £800 a month. $800 a month, but let's talk in pounds. There's going to be a lot of that. At the age of 30, she stops bartending and stops investing, but leaves her money in for a 10% return, and at the bottom there, at the age of 65, she has $5 million. Or pounds. That seems like a lot. So let's check the math on investor.gov. This is the best compound interest calculator site out there, I think. It's all in dollars. But just imagine pounds. Just imagine pound size dripping everywhere. So her initial investment is $0 and her monthly contribution is $800. And she does that for 10 years. That, at an estimated interest rate of 10%, is £152,999. We give her $152,999 in her initial investment. We reduce her monthly contributions to $0, and we increase the time to 35 years. She's at the age of 30 and she wants to retire when she's 65. And we continue to give it that 10% average return. And at the end, I discover that she's got $4,299,644. That's not quite the $5 million that the Personal Finance Club has calculated, but it's pretty close, and I'm pretty sure I've missed a bit of compounding in the middle there. So why does this curve do so well? Well, Jeremy in his post says that there's a difference between a 2% savings account and the 10% that he gets in the stock market. Over the last 40 years, the S&P 500, which tracks the US stock market, has gained about 11.9% per year on average. It's volatile, that's why we give it 10% generally, and over a 20-year period, the market has never been down. So from $152,000 initial investment, if I just wait, I can have about 4 million when I'm 65. So what could I get with 55,000? And then I found this amazing Coastfire calculator on walletburst.com. I'll leave a link in the description below. But this is a very powerful calculator that allows you to put in a lot of different variables to help you calculate when you might be able to retire. And I want my final retirement age to be 67. And I've calculated this year that my annual spending for 2022 is going to be $16,000. That's me personally. That's not my entire family. Our entire family is something more like 32,000, maybe even more if the missus wants to get a haircut or something. That'll take it like 40, 45,000, something like that. But for me personally, what I spend out of my wages right now is 16 grand. And if I'm on my own in retirement, or I've got my partner who also has their own pension in retirement, I'm not likely to spend 16 grand then. So I think even with this, I'm being quite generous. Now, my current invested assets are 55,000, and I'm going to set my monthly contribution to 0. I then set my growth rate at 10%, and we have an inflation rate at 3%. I don't know what you want to put there. 3% feels optimistic, but we'll still go with the government guided 2 to 3% inflation year on year. And then finally, I want to follow the famous Trinity study and set my withdrawal rate at 4%. If you need to look up Trinity studies and safe withdrawal rates, you can see one of my other videos. Now, with all of these variables in place, Coastfire is telling me that I only need £45,000. That's £45,000 invested right now that I can leave and not touch. If I do not touch my current net worth ever, by the age of 67, I will have £479,340. That is more than I would need to retire until I'm dead. So what does this mean? What can I do differently now I've reached this Coastfire number? Well, currently I deposit 1,600 into my Trading 212 ISA every month. I'm aiming to get £20,000 worth of investments every single year and fill that ISA. I might not have to deposit as much anymore. I earn somewhere around £2,300 a month as a paramedic, and I found that saving that amount each month isn't really that hard on my life. But it would probably make my missus's life better and my life better if I worked less. If I simply cut down my hours at work, I don't have to earn as much anymore, and I can start living a real life now. I could almost be semi-retired right now. Or while I'm still youngish and I don't hate my job that much, I could now take that £1,600 a month that I put into investments and put that into my mortgage, because I know that according to this 10% rule, this 10% average in the S&P 500, I will have enough to retire even though I've only got 55,000 right now. I'm literally right now in front of you talking myself into this. It's crazy. But how solid really is Jeremy's 10% theory on the stock market? Am I really going to earn 10% on average per year for the next 35 years? Well, it's true. The market, as in the S&P 500, has gone up on average 10% every year since its inception. And the second detail that was mentioned was that the S&P 500 has never lost money over a single 20-year period. That makes it sound like if I just dump my money in right now and don't touch it, never see it ever again, I will have quite a lot of money in 30 years. But what happens if you come into a relatively bad 10-year period? Well, over a bad 20 years where there's one or even two bad stock market crashes, the market sometimes only returns 0.5%. That's in total. That means if I've put my £55,000 right now into the top of the market, which is very possible, and it crashes now for the next 10 years and then recovers over the 10 years after that, I will still only have £55,000. That is not enough for me to retire on. So that is the risk I'd be taking by not continually depositing into the market, not dollar cost averaging my way all the way through these dips. And what if I wanted to retire earlier? What if I wanted to completely stop working at the age of 45? Well, at that age, I would really need to up my monthly contributions. And even from now, putting in 1,600 a month does not get me to that early retirement number. And I urge you to go away and have a look at this website, because it really is interesting to see how you could possibly find your Coastfire number. If I decide to go somewhere kind of halfway and retire at 60, I only have to put in £500 a month into my investments. That continues to de-risk me a little bit, allows me to retire at the age of 60 and still hits my goal quite comfortably. In fact, if I wanted to do that, my Coastfire number is actually 73,000. And if I continue to deposit at the rate I do, I could probably do that by the end of the year. But I'm very open to what people think about this, and as an idiot on the internet, I would like to know more, and I'd like to know if anybody out there has any issues with this or think it's a great idea. Let me know in the comments below. But so far, I'm on track to getting me retired, and I might not need to wait till 100 grand before I take my foot off the gas. I might start doing it now, and 1,600 a month is like a holiday every single month. I could literally do that. I'm not gonna do that, but I could definitely find other ways to use the money and maybe invest it somewhere a little bit differently. Take some more risk. So currently my entire account value sits at 55,813. I have a little bit that I'm going to invest today, and my current value in the portfolio is 54,420. This brings my total stock return to 19.75%, and I've been doing this 2 years, so I currently have roughly a return of 10% a year, even on a year where the S&P 500 is down 10%. I think it's down 15% right now. And if you listen to some investors and try not to lose money, it could be a lot more. I could get there a lot quicker. So my current return for August 22 is 19.75, and my S&P 500 return is 15.87. That's the size of the return I would be receiving if I only invested into the S&P 500. And you can see I'm quite clearly beating the market still, which is nice. It's not something that I expected in a world where a lot of people are severely underperforming the market. I've never actually at any time underperformed the S&P 500. I don't know. I don't want to get too cocky now, but this is pretty good. And one of the main important things to me is my dividend income and seeing how that grows. Every single month, these companies in my investment portfolio pay me a small amount of money just for investing in their company. They take a small amount of their profits and they dish it out to shareholders, and some of that comes back to me. It's a really easy way to keep track of your spending, keep track of your income, and see how your investment grows. I watch this every single month, and I've seen it go from zero, as in I earned absolutely nothing, all the way to its highest peak at £182 in 1 month. So in 1 month, in the month of June, these companies from this portfolio paid me £182 just in 1 month for doing absolutely nothing. This is passive income. I hate using that word, but it's passive income, and I've done literally nothing to get this money. But these payments often come on a quarterly basis. It doesn't consistently happen every single month. And in the month of July, I earned £84.77, and that's quite a lot to me. That's still money that's compounding straight into my investments. And by compounding, I mean this money that I receive immediately buys me new shares. And the idea is that this money that those companies pay me buy more shares of those companies, which then makes them pay more back to me. And this also acts exactly the same in a huge compounding line. And this trend line that I've got on here, this blue line, this purpley line, is my dividend growth. This is where I expect to have my dividend growth going over the next couple of years. And right now I'm somewhere between 182 and 84 per month. And according to this projection, if everything goes well, by the end of next year, by this time next year, I could be earning £400 a month just in dividends. That doesn't take into account capital appreciation. That's just the dividend. And then eventually, somehow, according to these calculators, I just end up with a shit ton of money. So how do I plan on getting there? Well, I plan at the moment not to make any changes, and I'm going to keep investing into the market. There's a lot of fear in the market right now. There's a lot of fear of recession. And if there is a recession and the market does drop by 50%, I will continue investing into the market, because there's no better time to invest in the market on a big drop. And we might be right now halfway through one of these said drops. So I've got to find some places to put some money in. And I've got to admit, it's never been harder to do that. And to make this easier, I'm just going to do this through the pie. I'm going to set it to custom, and I'm going to go through and kind of make a few changes just based on the pie. I'm going to put a bit into Amazon. I only wanted to put a little bit into Amazon to make it up. I'm going to put a little bit into Alphabet today. I'm going to put a little bit into ASML, a little bit into high-paying dividend company Avalon Bay Communities, one of my favorite communities right now. And it sounds like on their earnings call, everything is going perfectly fine. Brilliant stuff. Broadcom, another high dividend payer. I'm going to put a little bit more into them as well. We're 63% through. Digital Realty Trust deserves a little bit of money too. JP Morgan gets a little bit today. KLA gets a little bit less. Not as much, but a little bit less. Realty Income, another great dividend payer, gets a little bit more money. And FTSE Emerging Markets gets the rest of it. I confirm that buy, and Trading 212 will automatically invest all of that money into my pie right now, assuming the market is open. And there we go. My income pie now has £52,140 in it, and my total portfolio value is 55,796. Let me know what you think about my investments, and thank you so much for watching this video. Feel free to like, subscribe, and invest.
Cash rules everything around me. They thought that I fell off for a second, they were doubting.